What would you like to say about Pan-India distribution network?
Pan-India distribution network is indeed going to be a very favorite area for us to expand organically. We have been very strong in the northern and more so in the western region. The eastern and the southern region will now also be opened up. We see ourselves moving into a situation of covering close to 360,000 outlets or slightly more than that by another 6 to 8 months time, and that will ensure us a very strong presence in all states down in the southern region as well as the eastern region. The northern region distribution will be beefed up. There are potential towns even in the existing areas where we haven't extended our distribution, which we will. Secondary to it is we will be also ensuring that our business in the existing number of outlets goes up, and we are also able to put in our product in additional outlets in the existing geographical areas where we command a certain amount of presence. All this should lead to a very strong pan-India presence.
What are the reasons for net profit coming down in the current year against last year?
The reasons could be summed up in a short way as follows. First and foremost, last year's markets for every company were under pressure. The rainfall was inadequate, the crop availability was inadequate, the pricing was reasonably fluctuating on the higher side, and in the edible oil market you have to understand that you are operating on very thin margins or reasonable margins. Our refineries, which should have come in, and or our production facilities at Manor, which have got slightly delayed, should have provided us with the savings which would have enabled us to book in higher profitability. That has been delayed slightly. Secondly, investments which have come out of our IPO based funding in terms of capital expenditure, etc., have resulted in the depreciation component also increasing. All these have resulted in a situation where it has reduced the profit margins, but I think it's a transitory situation. This year's figures would be fairly robust, and one feels that or is reasonably assured that we will deliver per our preset budgets, which should make it comfortable for our stakeholders for having invested in the company.
What were the reasons for expansion to be funded only by equity?
This is a classic question which many people ask. The reason is pretty much simple. When you're talking of a country where you've got a volume of about 9.8 million tons per annum requirement and you're importing close to 40% of the overall requirement, you're talking, and that too in palm oil, which is considered to be the lower end of the pricing spectrum, you're talking of a situation where a consumer down the line, as his income levels goes down, is price sensitive. Sunflower and soya again are products which, though promoted on the health plank or otherwise, are also subject to price sensitivity.